Hi, this is Ron Rowland for Money Markets TV. Have you noticed that the best performing ETFs and mutual funds often specialize in international stocks? Funds focused on emerging markets, Asia Pacific, Brazil, and many others dominate the top of any long term return rankings. Part of that reason is that many foreign markets have outperformed the US recently, but there's another reason too. If you invest outside the US, your return will reflect the performance of the market plus any movement in the foreign market's currency, and the consequences can be dramatic. Let me explain. If you're a US investor and the dollar loses value against the local currency in which you invest, you can show a profit even if your foreign investment goes nowhere. In other words, investing outside the US involves a type of leverage. And similar to a margin account, the leverage can work either for you or against you. For instance, if your chosen international market gains in value and its currency also gains in value, you get the benefit of both. However, if your chosen international market loses value and its currency also loses value, your losses will be magnified. This is why international ETFs are often more volatile than domestic ones. The currency exposure gives you a whole new way to gain or lose value. We can see this most dramatically in the case of Japan. If a US investor bought the MSCI Japan Index 10 years ago, he or she would have lost about 0.2% per year. But a Japanese investor who bought the fund with yen would have lost nearly 4.5% a year. Because of this built-in currency risk, buying international ETFs is an implied bet against the US dollar. And over the past decade or so, that's worked very well for US investors because the dollar has been trending steadily lower. We don't know if this dollar weakness will continue or whether it will turn around. So, what if you want to invest in an international ETF but don't want the currency risk? Well, before 2009, you would have been out of luck. You couldn't have had one without the other. Then 2 years ago, WisdomTree introduced the International Hedged Equity Fund, ticker symbol HEDJ. And now another ETF sponsor, Deutsche Bank, is launching 5 new funds that attempt to hedge currency movements right out of the equation. They include one ETF that tracks the MSCI EAFE index and others that follow emerging markets, Brazil, Canada, and Japan. If they achieve their objectives, these ETFs will reflect the change in their respective markets without any help or drag from the US dollar. Of course, I don't know if they will perform well, just as I don't know what the future holds for the greenback. I just wanted you to make sure that you know that they're available. Your toolbox is getting bigger all the time. I'm Ron Rowland for Money Markets TV. Thank you for watching.